The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Robert Brott. Remember that there's a part of life for which you are the explanation. Market-wise, let's take a look at it out here. We have the Dow Industrials down 229, NASDAQ off 62, S&P's off 21. Gold contract flat at 1,233 an ounce. Silver down 19 cents at $16.96 an ounce. Platinum down $4 at 1,235 an ounce. Copper, you talk about getting smoked in a big way, down 12.5 cents at $2.51 a pound. Oil off the low, up $2 right now at $47.96. Oil finally got a bounce into it. Bonds. The bond market, folks, is just phenomenal. So check this out. You got the 10-year right now is up 12 ticks. You're trading at 129.22. 30-year is up 22 ticks at 149.10. Both of them, folks, up on conviction. It's pretty amazing. So the 30-year is going after its swing high. You know, right now the 30 is at 149.10. That swing high is 153.11. The 10-year has got into the October 15th swing high. Bottom line, I expect that's going to be taken out. The amazing thing here, folks, is this, is that the 30-year has never traded at a yield this low, flat out. Bottom line. The 10-year right now is at 1.8. The 30-year is at 2.4. Pretty amazing. Now, that's not the most amazing part. The most amazing part will be how does it tackle the swing highs? Because what we have out here is this, is that swing high, if that gets taken out on volume, that can send the 30-year up to 177, can send the 10-year up to 155. Monster numbers, no doubt. King dollar down 137 ticks, trading at 92.36. You got the euro up 6 ticks at 117, and the yen is down 56 at 117.36. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&P futures, let's take a look at them. What do you have? Okay, so check it out. This is what we have. Thus far today, we have got down to the 1997.50 area. Monster volume, by the way, okay? We've already done 2.4 million contracts. You're going into 2 million contracts. So we've already done more contracts than the January 6th low. That just says, guess what? You're going to get lower. What the market is gunning for right now is the 1961 low from the December 16th swing low. Now, futures market has the juice in it. Let me show you something here, though. But this is going to get interesting to see how this whole baby shakes out. We have option expiration on Friday. I expect to see an expansion of volume then. We have volume out here, but when you're coming into this swing point, in order to break this swing, you're going to need a lot more volume than we're dealing with right now in order for it to stay lower. We're at 148 million right now, so that's saying that the swing point that we're going into from the 6th of January, it's going to have the juice more than likely. Last hour, I expect you're going to see some nasty selling in here. We just had the counter trend bounce. Bottom line, market can't hold anything. That being said, in order to break the December 16th swing low at 197.86 inside the SPY, you're going to need a huge expansion of volume. You're talking about 259 million. Now, what I do expect you're going to see, though, is what? Is Friday is option expiration. That's when the market's going to have a chance to not only hit that number, but basically take that number apart. That's on your S&Ps. If we take a look at the NDX, we use the 3Qs. What you're going to see inside the 3Qs, kind of the same type of setup. The 3Qs right now, you get them trading out at 100.60. You're going, thus far, we've done 39 million shares. You're going into 66. You can see that the 3Qs are going to need more juice. What you also do have, and this is where this is going to get really wild, is that this is ICE. This is how ICE is setting up. ICE is setting up at 99.96. And I suspect what you can also do in a heartbeat, you come up to that area and it just makes the dive over that area fast and furious. The small caps, the Russell 2000, if we take a look at the Russell 2000, what you're going to see, the Russell is this. You've done 27 million shares, and the Russell's going to lead a lot more shares than that. Last time we were down at this level on the 6th, we were banging out 67 million. So the Russell needs a lot more. What hasn't happened yet, however, is that the Russell hasn't tested that lowest swing point. So the bottom line, we know that's where the market talks, walks, and squawks. We go over to the oil contract. So let's look at oil. Oil got a bounce out of here. Oil right now is up. It's trading at 48.18, and that's a legit bounce too, by the way. Yesterday on the way down, we did 349,000 contracts. It didn't make a lower low today. It got off that low. You're doing 47,000 contracts. Is that right? No, 476,000 contracts. So what that says is that oil's going to have a shot to try to get into 54 bucks again. You got to remember something. Oil has gone straight down from this 92 area all the way into that. Now, if oil decides to do an ABC down, what you'll see is this. You'll see immediately the volume starting to contract. King Dollar is the name out here, folks. Why is it the name? Because what you're going to see is that King Dollar continues to basically not be able to hang at the highs as gold has been able to hang at its highs. You had King Dollar trade all the way back up to 92.63 today. Couldn't handle the price. Again, contraction of volume in a big way. My take is that good old King Dollar had it at the highs. Now, gold contract. Let's go over to our man Tom from Tampa because we're going to be talking gold anyway. Hey, Tom, what's going on?
Hey, Tom, how you doing?
I'm doing great. You having a good day out there?
Oh, yeah. How about you?
I am. Thank you.
Good. Hey, Tom, you mind going over that GLD? It went back through that 118.88 area today. I don't know if it had enough energy or not. You think it still wants to try to jump up there and take out that 120.50 area?
Let's take a look at it. Okay, so what's really cool here, folks, is this. We're going to look at the gold future and then the GLD. And what the gold future did today is just dynamite, because what we had yesterday is that it was getting into the swing point yesterday. So if I do both days, so watch how this shakes out, folks. Yesterday, the gold contract got to 1244.50. We did 138,000 contracts. Today, we got to 1244.60, and we did 179,000 contracts. That's what you need, folks. You need an expansion of volume as you're going into it, because we're going into 241,000 contracts. So what you have is this. You're coming up to the swing high, you're not backing off, and you're getting an expansion of volume. Okay, so now let's go over to the GLD. The GLD, folks, is the Street Tracks Trust. It trades at 10% of the price of gold, and what we have in the GLD is this. The swing high that it's going after is the 118.99. As Tom just said, we're at 118.41, and the GLD, Tom, does need more volume. When you're trading the GLD, you want to be keeping your eye on the future contract, because the future contract is really what matters. The GLD is important, there's no doubt, but what I've found more than anything is it's the actual future price, where that goes, where the volume goes, that's where the GLD will pick up. And what you do have with the GLD, by the way, it wouldn't happen today because gold is not up today, it's flat today. Down. It's been up and down. It's down $1.90 right now. Is that the way that the GLD works is that all the ETF structures, folks, they either make shares or destroy shares. That's just how the ETF structure works. Bottom line, as gold's going up, of course, what ends up happening is that the GLD has to make more shares. As they make more shares, what they specifically have to do, though, is go buy the actual bullion. You know, so my take is that you're still. What strike price? You're the 125s, right?
Right.
Yeah. So you get some action. You know, bottom line is that it's not going to be overnight, but I suspect you have some action here. The dollar is going to be the number here, Tom.
Right.
Cooking, brother.
Thanks, Tom.
Okay, man. Have a great one. Have a safe one. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Coming into this close, folks, you can expect high volatility, and you are going to get more selling. Right now, the Dow is down 300. You're only down 219 right now. This is a bear market in an extraordinary way, folks. Each little bounce gets sold, and it gets sold vicious. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials down 166, Nasdaq's off 39, S&Ps are off, 10.5. And as we do each and every Wednesday at 20 past the first hour, we get our man, Mr. Darryl Martin. Don't forget, folks, Darryl has an outstanding show every Tuesday, Thursday, right here, 1 to 2 Eastern Standard Time. He specializes in the Nadex platform. It's an awesome platform. If you haven't test drove it yet, come over to our website at TFNN. Hit the banner on the right-hand side or across the top. You can bring up the platform. They'll put $25,000 of paper money into your account. You can start understanding how these contracts work. And, of course, don't forget, every Friday morning, 10 to 11 Eastern Standard Time, Darryl and I do a show live 10 to 11 Eastern Standard Time. Darryl Martin, what's going on?
How's it going, man?
How can it not be going great?
Did you see that oil move at the end of the day?
I did see it. I wasn't trading oil, but I did see it. Yes, I did.
Fantastic move. Yeah, there's some great moves today.
There's no doubt. And, you know, when we talk about volatility, folks, what happens is that high volatility for traders, okay, is the name of the game, folks. But the reason being, you don't need the tops, the bottoms, you need everything in the middle. When we talk, let me ask you something. What I'd love to see you do, and I know you do this a lot on your program, is that selling of premium inside the Nadex platform. If we could get our heads wrapped around that a little, and I know you like doing that, because what happens, folks, in high volatile markets is that people get paranoid, number one. The spreads open up. The volatility gets quicker. And, you know, particularly for us that trade the Nadex product a lot, what happens is this. It's a new product, and it's a dynamite product, folks. So what happens is this, is that when the markets basically are flat, and, you know, we're trading swing points, what ends up happening is that the premiums are basically really low, and in fact, some of the ticks are just amazing. Then what ends up, so when you're putting buys or sells on, okay, you're not worrying about the premium so much. What happens on large downdrafts like this, the market makers, they put premiums in them immediately, okay?
Right.
And then the following day, they drop out of them again. So we were out here trading it. You know, we saw this happen last time was about 3 or 4 days ago. And then, you know, it got straightened out again. But I was saying to one of the tigers out here, I said, so we got to wrap around Darryl's selling these premiums. Because that's all, what it is, folks. You just do the opposite thing. That's what you come down to. Do you know what I'm saying?
Exactly. Yep. So, but you talk about going in and collecting the premium, like buying the money contracts?
Right.
Yeah.
Right.
And, I mean, and that's one of the things, too, I talk about on my show that I do each week. I go and I talk about actually collecting premium on news, which is the main way I actually trade it now.
Yeah. And
just watching how the market makers, and with Ivy going up especially,
yes,
implied volatility.
Right.
And so, you know, in reference to like a binary on collecting premium, you know, let's say you're looking at a market and it's at, you know, say 40, you know, was it, say 46, okay?
Yes.
And I mean, now it's up at like 47.80 or something.
Right.
But 48.15 now. But anyways, but if you went in at 46 and you're like, hey, I think the market's going up, well, hey, you could buy a 48, you know, 20 or whatever, you know, 46.20, 47.20. I mean, you could go as far out as you wanted to, or you could get a really close one.
Okay.
At like 46.20, that's all out of the money. It's really cheap. It's great return.
Right.
Right. But it has to move.
Right.
Okay.
You're right.
Well, when the implied volatility is in there, it'll push that further away.
Yes.
And so what you can do is, if you go, hey, I think it's going up at 46, I could buy like a 45, say, you know, 45.60.
Okay.
And maybe I can buy that for, let's just say, $70.
Yeah.
Okay. If the market goes up, no matter how high it goes, I profit. If the market stays flat there at 46, just oscillates around till the end of the day,
right,
I profit. If it goes down as much as 46, but not more than 46 by expiration, I still profit. Okay?
Right.
Because I bought it, and basically what I'm saying, hey, it's just going to stay greater than 46, say, you know, 45.60. Okay. It's at 46. I'm going to say it's staying greater than 45.60, so it's already greater than that.
Yes.
So that's why I'm buying it for 70. Now, that means my risk is 70, and I'm making 30.
Right.
Okay?
Right.
So I have a higher, it's not the great risk-reward ratio.
Yep.
But that is offset by the probability of it can go up, stay flat, or go down, and I profit. So I have a higher probability trade. That's why you're paying more.
And what happens there, folks, is this, is that on a day like today, the probability that the implied volatility will go down is almost nil. What happens is that it does go down overnight. It goes down dramatically, too, by the way,
Right.
okay? But when you're in the middle of the day, and that's why I'm asking Daryl this question specifically, because what happens is that once it gets going, right, it just makes sense that, okay, man, I'm going to keep this volatility high, and as a trader, you can kind of, you know, we've been down 300, you're down 200, you're down 170, now you're down 200 again. That will stay kind of how the day trades out. So that's pretty cool to know. Okay, right.
And then if some people are like, well, I don't like that risk, well, what you can do is you can go in and you can get out when it hits your strike.
Right.
So if it's at 46 and you bought the 45.60 and it goes down 40 ticks against you, well, at the market, and this is an important thing on premium collection on binaries, probably one of the most important lessons, is when the market, whatever you're trading, say oil or whatever,
Yep.
is at the same level as the strike price you bought or sold, okay?
Okay.
When it's at the same strike that you entered the trade on,
Yes.
the binary is going to be worth basically $50, you know,
Right.
plus or minus bid offer spread, because there's
Right.
a 50-50 chance it'll still be at that strike price because it's already at that strike price. So it's
Yes.
50-50 will be above it or below
Okay.
the price. Knowing that, if I buy something at 70, it drops down, it hits the strike, well, I could get out at, let's say, 50, maybe, let's just say 5 ticks a bid-ask spread. So let's say 45.
Yes.
Okay? So I bought it at 70. I can make up to $30.
Right.
You know, and then if it went down to, say, 45, I'm losing $25. Right?
Yes.
And then the other thing is, so the number one thing is understand that you can limit your risk. You don't have to hold the thing till expiration.
It
You
doesn't
get
have
out
to be the whole thing. And I don't even mind it being the whole thing, realistically.
Right.
Do you know what I'm saying? What happens, folks, is that the one of the keys is that it's such a defined risk, okay? So,
Right.
And what we're talking about here is that if you don't like one side, meaning when the premiums go up, well, good.
100%.
All you're doing is flipping the position. You're not flipping the position of what you think the market's going to do. I'm not doing that. What I'm doing is I'm taking advantage of the higher premiums.
And that even works on the spreads.
Yeah. Okay.
You go in and you're like, well, that's just stupid. You know, there's just way too much premium in there.
Which is really sweet. Yeah.
And you don't want to go but you're not short on the market, so you don't want to go sell, right?
Right.
Like maybe you're long, you think, hey, oil's going to rise. But you don't want to buy that thing because it's stupid premium.
Yeah.
You could go in and you can sell it.
Right.
And then, like I said, let the premium be deflated out. And even if you go in and it's sort of funny because you're not taking a different stance on the market.
No,
you're just
not.
taking a stance on the premium.
Right, which is important, which is the strategy. This is what
It's like you're selling instead of buying.
Yep.
But you're only selling because you're able to sell it like 60 ticks above the market.
Exactly.
So you're okay. I think it's going up. I just don't think it's going up that much, or whatever.
That's right.
Yeah.
Would it be like, folks? We'll cut to the chase for a second. Say we're about buying a car, okay? And that car every single day is $1,000, right? Well, what ends up happening, and that car is either going north or south. So you're betting which way it's going, north or south. What happens is that, let's say we're just saying that the car's going south. Bottom line, it's $1,000 each way, right? So either sell it for $1,000, buy it for $1,000. It's going south. Then when volatility comes in the market, guess what, folks? That same car is $1,200 or $1,300. And then I say, well, hey, man, I think it's still going south, but if it's going south, I'm going to sell it because the bottom line is that the volatility is working in my favor, and in my favor is a big number because if I'm right on it going south, the volatility would go even higher, which is sick. You know what I mean?
Exactly.
Unreal.
Yep.
Listen, folks, tomorrow, 1 o'clock, right here at TFNN. Daryl, thank you so much, man.
Hey, thank you.
We'll come right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 211. Nasdaq's off 30. S&Ps are off 12. Let's go to Jason in Spokane, Washington. Hey, Jason, what's going on?
Nothing. Looking at UNG.
UNG. So let's take a look at it. You get natural gas, folks. The future is up 10%, as is UNG. So natural gas today, biggest mover inside the future market. has the juice behind it. You did 87,000 contracts. So now the question is, you get UNG moves with volume. The question is, where do you put your stop? You know, so UNG's at 16.59. That's $1.69 right now. 18.27. I mean, it can run to 18.27 real easy. I mean, this has been a disaster. It ran down from $23 to $14.
Correct.
So the real key is that, you know, do you wait for this to pull back? And that's what I would do. And it's because this is what you have. I believe, let me just say, and I'm in Mr. Andy Hecht, folks, okay? He will be back with us next week. He's out skiing with his 2 sons right now. So it's he's out there growling and prowling, but I'm sure he's elated because I know that he was scaling down on this, and his date was Valentine's Day for this thing to move, and he certainly got the move out here today. The amount of gas hasn't come out yet. You know, last week, bottom line is that there was more gas than in the stockpile than people were using. What they're speculating, what the news out there, they're speculating that from January 22nd to the 26th, the Midwest and the Northeast are going to basically get smoked again with this Arctic deal coming in. So, you know, you just got to figure out, because this gap's all over the place, as does natural gas itself, because that's just how it is. It's what's overnight, what's the natural gas trading at, and that's how it trades, man. So I'd still wait for what you have now is this: you have the first sign of strength inside the market. That's what you have, and when that happens, you buy the pullback.
I had a question about the weekly chart.
Okay, go ahead.
Is that a bullish engulfing as of now, or do you have to wait till the end of Friday to confirm it?
You would have to wait to the end of Friday. Great question, and this is why. Because, well, actually, no, you don't. This is, oh, I see what you're saying. Oh, that's funny. Yeah, you would, because what's happened right now, folks, is that today has engulfed 3 trading days, and it's done it very well, too. If you when we're talking a weekly, yes, you have to wait to the end of the week. Do you know what I mean?
Yeah, totally. All right, appreciate it.
Okay, man. Have a great one. Have a safe one. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom, it's 22 degrees, four more than yesterday.
20. So, you know, I mean, 22 degrees, folks. This is unusual for Boston and vicinity to stay that cold. Okay?
It's brutal.
Yeah, you know, Boston is cold, folks, but cold in Boston normally is, you know, 37, 38, 40. You know, it gets below 28 in Boston because of the wind chill. It's, you're talking some heavy-duty cold, you know, that goes right through your bones. There's no doubt, man. So
I'm trying to make some shekels with these stocks so I can move to Florida.
There you go. You should just move. You should just move, and then you make some shekels down here.
Yeah, I'll be in the booth like I was in Waltham with you. How many years ago was that?
Oh, my God. That's 20 years ago. I know. It's pretty cool, right? It's wild.
Oh, it was great. Yeah, I wanted to ask you, I shot at SWKS. I got out again, but...
Let's take a look at it. It's Skyworks. It's a semiconductor, wireless semiconductor company. The low for the year is 28. The high 74. You know, you're coming down to $1.49 today, and it's going to need some more juice. I mean, but when I look at this, it's like, okay, yeah, it wants to run down to like 47. Oh, 47.
That gap, right? The last volume day?
That's pretty intense, man. Well, you got the... That's 53 too. That lines up. See, I was lining you up on the July level, but it does line up at the same place where you're talking about there, as it went topside on the 13th. Let me put this on a daily for a second. I think I got this on a weekly. Let me just put this on a daily. Oh yeah, 1 second. There. So there's the. Okay, so we're at 7. Well, the first stop on this on the way down would be like 66. You're at 71. 66. You get volume at 66, then you're going to, come down to this 63.35 level.
Okay. We getting volume coming in the end of the day?
We have
selling.
Let's take a look. What I expect you're going to see, folks, is this, though. We're set up that it's going to be a monster Friday. And what I expect is that, right now, right now we have light volume. So let me see what time it is. You get 41. No, this is going to be light volume. So what you have is this. If you're a bear, you didn't want to see this swing point basically, get taken out, and it hasn't. If you're a bull, what you do want to see as a bounce, and I expect you'll probably, the way this market's setting up right now, it looks like we'll bounce a little tomorrow. You bounce on light volume, and then watch out Friday, man. Option expiration Friday is going to be one nasty day.
Ooh, that's right. Great. All right. Thanks, Tom.
Okay,
Appreciate
man.
it.
Have a great one. Have a safe one. Let's go to Larry in Dallas. Hey, Larry, what's going on?
Hey, Tom, great show as always.
Nice.
Your earlier caller answered my question about UNG.
Okay.
And, as far as that goes. But as far as the oil stocks go, okay,
yep.
I'm looking for an entry point on Conoco. Where do you think that would go to?
Conoco. Is that CON? What's the symbol?
I think it's COP.
COP. Okay. Okay. Let's take a look at this, because this is going to be interesting, folks, to see just the oil equities were the first ones to basically break. They broke way before oil, looking at where they broke last July. So Conoco's down from 80 at 62, 63. Now, what type of a trade are you looking for here?
I'm looking for a long-term trade.
Yeah.
It's a good stock. I've made money on it before, and, as far as that goes.
Yeah.
And, I just like the company. I'm here in Texas, and I know these big oil companies are going to do fine. The small guys, the middle guys, they're already getting hurt.
Yeah,
okay?
right. No, I'm with you, right.
Yeah.
This is where, so picture this, folks. I love trading these oils. They try trading huge consolidation patterns. And they're almost ready to buy right now, on a short-term basis, because the way that every one of them is set up, it's like, okay, this is coming down today on light volume. You hit a price point today of 60.85. You've only done 83 million shares, and 8.3 million shares, rather, and you're going into 12 million. So it rejected that low. The actual low that had the most amount of volume is 63.56. And when you do that, most times it's like, okay, hold it. That wants to bounce. Now, the type of market we have, I'm not going to buy them. because of just what I said, meaning I think we're going to get a bounce, but then Friday I think it's going to be a problem. And what happens, folks, in bear market rallies is that all the surprises actually come to the downside, not to the upside. If this wasn't a market that was so nasty right now, I would be into the DUG in a heartbeat. Now, the DUG is the, double pro share bull position of all these large, big integrated, not DIGI, DIG. It'd be just the opposite. It's the DIG I'd be getting into. The DUG is what it was on the way up, meaning, well, that was going up, oil was going down, and now it would be just the opposite.
What's your feeling on the refiners right now?
Let's go take a look at Valero. Okay, so no, don't touch Valero. See, there's a difference. There's a difference on how this is set up. So if we look at Valero, Valero's coming into that October 16th swing low, way too much volume. The Valero swing low is out there, and it has 10 million shares. We've already done 11 million today. So you can see that the correlation is not the same. But the large integrated are the ones look much better, kind of where you started, But.
Right. Hey, great. Thanks for the information. Have a great
man.
day.
Have a great one. Have a safe one. Don't forget, folks, if you'd like to test drive my daily newsletter, this is a great time to test drive it. You can test drive it 30 days, absolutely free. If you do that, that's only good until this Sunday. If you do that, you get a copy of my book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, and you also get into the webinar, which is going to be next Wednesday night, January 21st, 1 hour. All of that, folks, you can test drive for absolutely zero. Check it out on the front page of TFNN. Coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 181. You get the NASDAQ off 41. S&Ps are off 11.5. If we go over and we take a look at the financial sector, folks, bottom line, financial sector went south in an extraordinary way. J.P. Morgan led it. And what you had out here, no doubt, is that you had it yesterday banging on this swing point from December 16th. You had the expansion of volume as you were banging on it. J.P. Morgan came out with the numbers this morning. Bottom line is that didn't make their numbers. Jamie Dimon screaming that the regulators are all over him. He has $990 million in legal fees in 90 days every quarter. Bottom line, folks, is that it's part of the bank's makeup now. And he can be screaming all he wants, but these banks, okay, the thing that about J.P. Morgan this morning, by the way, and we've been talking about this, is that if you thought the mortgage deal was big, folks, okay, inside those numbers out here this morning, what's costing them buku money, and who knows how many they've thrown under the table, meaning that not paying someone under the table, but getting rid of so many charges, is the currency, basically frauds. So the banks, bottom line, part of the legal overhead every single day and every single month is just that, guess what? They're nasty. That's the bottom line. And that's not going to change. That's not going to change for a while. So banks out here today, J.P. Morgan Chase, what does it do? It's trading at 56.76. Broke the swing point, did it with the juice. You've done 42 million shares. What's screaming out here, J.P. Morgan's going to go after this October 15th swing low now of 54. We go take a look at it. That dragged all the rest of them right down with them because it's going to be there really is no difference with them. Morgan Stanley did the same thing. Morgan Stanley blew away its swing point. That swing point was 35.44. It had 11 million shares at that. We've already done 14 million. Morgan Stanley also has that swing low of $31. That's where that's going. Citigroup, same setup in Citigroup. We're going to get a lot out of Citigroup. Check this out. This is what you always want to do. The market's job, folks, is to release information. And this is just dynamite, okay? So check out what Citigroup released today. Citigroup gap down. It's done 36 million shares. It's going into the October 15th swing point. That swing point, the low of that swing point is 48.11. Now, this is what you have. So check it out. This is pretty cool. We've done 36 million. The swing point at 48.11 is 55 million. So you can see you're going to need more volume. That's the first part. Second part's a little bit different. And what the second part is, it still can't hold price. So the third part's going to be, what is it going to come out in the weekly? So this one's going to be a really great one to watch. This is why. For the bears, you'd be watching it, and what you'd be looking for is that you're looking for a little bounce, and it comes back down on Friday. That'll give you weekly high volume lows. For the bulls, what you'd be looking for is it gets out of here, and the volume doesn't expand that much, so that the weekly would still have a lighter test on the weekly. Because what you do have right now in Citi is that Citi is coming down, testing that area. And thus far, on the weekly, we've done 82 million shares, and it's 173. But that's great information. The reason being that it's so great is that Citigroup is down there before the rest of them are down there. We go over to Goldman Sachs and we look at Goldman. Goldman broke the December swings as the rest of the banks did. It's going after the October swing. Goldman out here today has done 36 million shares. That swing had 41 million. So actually, Goldman broke the swing with lighter volume. So Goldman's going to be one to watch when we get down to that October 15th swing low. Big number. American Express. We take a look at American Express. AXP, same setup in American Express. American Express has done 59 million. Broke it with volume big time, 49 million. And what's that hanging out there down at the bottom? $78, and right now we're at 87. So American Express is a long way down. The XLF in general, that blew it away. That blew away at swing point. And if you want to see just how the art of the time in the trade works, folks, price, volume, where the supply and demand is, you can see that yesterday in all of those financials, you were pushing the swing point and you had expanded volume. Bottom line, comes out today, blows it away. Larger yet, though, is that October 15th swing low. The October 15th swing low is a big number. Tesla's been getting hit out there and got hit pretty good out here today. TS. There we go. Tesla is trading at 192. Now, this is really a problem for Tesla. What you have with Tesla is this. This is an ABC structure on the way down. Blew away its B point, took it out with volume, and this is what you have. Your A point on Tesla is the high that was generated November 17th. That's 259. The B is the low, which is 192. That's A to B, 259.60. So you got 68 A to B. Your C is the 228. So what did I just say? 68. That gives you 30. That's 38. That's 162. 162 is your A to B equals C to D on Tesla. Tesla out here today, it's done 11 million shares. Takes out the B point of 7.3 million shares. That's a classic. And, of course, at 162, that's going to be half price. Tesla was traded up here at the 300 mark. If we go back to the SPY just for a second and take a look at it, this is important because the indice itself, folks, are still high compared to, we talked about this yesterday, all one by one. The equities are getting down to this October 15th swing low. The sectors are getting down to the swing low. On the SPY, it's still at 200. 181.92 is the swing point from October 15th. So you can see, if you think this thing is a market that is almost over correction-wise, it's not even close. It's not even close because you're going to see those indices get down into that level. I can tell you from listening to some of the financial press out here today, it was perfect for a bear. There's no fear, absolutely zero fear, and the traders on fast money, there isn't one of them that's saying you're not going to buy it. It's like, oh, really? I guess they're in the knife business. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now down 200. Nasdaq's off 25. S&Ps are off 13. And until you hear all those analysts saying, "Oh, don't buy it, folks," that's when we'll get the first real bounce in this market. We're going to come right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've listened to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by, one second. That was the last quote. Here we go. Maya Angelou. I believe the most important thing beyond discipline and creativity is daring to dare. Oh, yeah. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials finish down 186. NASDAQ off 41. S&P's off 11.5. Gold contract down $3, trading out at $1,232 an ounce. Silver down 31 cents at $16.84 an ounce. Platinum down, $7 at 1,232 ounces. $1,232 an ounce. Copper got smoked, folks, down 11.5 pennies at $2.52 a pound. Copper will go over copper. Copper looks like it's going to be going after this 2008 low. Pretty amazing. Oil market. Oil got a bounce out of here. Oil up $2.55 at 48.44. And oil did have juice on the way up, folks. Yesterday, it had wide price spread volume on the way up. You're going to probably, I expect we're going to get a bounce out of this oil market. Bonds. The bond market, folks, is just amazing. What we have with bonds out here, once again, is this. The 10-year up 11 ticks, 129.21. The 30-year up 14 ticks, 149.02. The 30-year, folks, the 10-year went after the October 15th swing high today. 30-year is going after its March swing high. You're at 149, 153.11 is the number. King dollar. King dollar down 227 ticks at 92.27. What you had with King dollar is this. King dollar tried to get into its high once again this morning. Couldn't handle it. Had light volume. Backed off it. King dollar, folks, my take, topped out. Euro. Euro up 17 ticks at 117.89. The yen down 62 at 117.30. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We'll start with the future market, and this is what you have. Fast, furious, all the above, folks. What we also had happen here, which is pretty wild, is that we had light volume. Even though there was high, fast moves on the way down, bottom line, volume come in at the end of the day out here. We did 912 million shares versus 872. The futures, big volume in the futures. We've done 2.4 million contracts. That was going into 2 million contracts. You got underneath that low, had the volume in the move. That's saying we can get a small bounce. No doubt. I expect that we're going to get some kind of small bounce out here tomorrow. And when I say a small bounce on the future market, where that could bring it is that right now we're at the 2007 in the futures. This could get into 2031 in a heartbeat. And what I expect you'll see there, by the way, is this. You'll get a bounce on light volume. And where are we going to be? We're building cause to not only get down to the December 17th swing low. We're building cause, folks, to get down into the October 15th swing low, which is 1805. You know, the financials fell apart today. We'll go over all of these. But bottom line, that's where I'm expecting this to go. If we take a look at the NDX 100, we'll use the 3 Qs inside the NDX 100. What you're going to see, and this is very subtle, the NDX 100 out here today did 50 million shares. Huge expansion of volume, by the way. Folks, when we were doing the show just a little bit earlier, the first hour, this one was only at 34 million. So 14 million came in at the end of the day. Still light volume. Bottom line, the 3 Qs don't have to bounce. The 3 Qs are building cause to go blow away the 99.98 swing low that was established out there on December 16th. And I do expect that the 90.24 is going to get hit from October 15th. That's your benchmark out there. We go into the Russell 2000. Russell 2000 wants to bounce. Russell 2000 was very weak on the way down today. What we had inside the Russell is this. You had the price spread, no doubt. Russell's at 116.80. The Russell, however, only did 34 million shares. That 34 million was going into 67 million. So bottom line, Russell wants to bounce once again. That's a building cost structure, though, to get the lower price. We go over to the gold market. We take a look at gold. Gold, folks, this is really cool what gold did. So check this out. Gold market is trading at $12.29, down $4. We hit $12.44. Yesterday, we hit $12.44. What the difference is, yesterday we hit $12.44. We did it with 138,000 contracts. Today, we hit $12.44, 179,000 contracts. What you have there is that you're pushing into the swing high, and we still need more. It's 204,000 contracts that we're going into. 241,000 contracts. That was the high that was generated out there on December 10th. Bottom line, you're building cause to get up and into that area. Why? Well, let's go over to the King Dollar. What you have with King Dollar is this. And this is, folks, depending what time of the day that you're trading, this is something you really absolutely want to wrap your head around. And this is what it is. So if I'm going to put this on a 10-minute first, what you're going to see is that bright and early this morning, and if you've never traded the dollar index, you got to remember the index itself, okay? Bottom line is a decent vehicle to trade when everyone in the U.S. is up. Prior to that, okay, it's not bad, but it's not real liquid. Well, what we had out here this morning at 4:40, I believe it was, yeah, because when I get up, it was 4:40 this morning. That dollar index turned around and hit 92.63. Now, 92.53 is the high from 2005. 92.63 is the high that it's been banging out at. Guess what? We hit that high up there with all of 1,000 contracts. See, you don't want to be. When I was up at 6, I says, oh, thank you, God. That was so beautiful. It was insane. Why? It goes sideways for a bit. As soon as it actually opens in the U.S., okay, this thing plummeted from 92.63 down to 92.01. Volume expanded to 5,400 contracts, got to a lower low with 5,000 contracts and then 3,000 contracts. You did a counter trend bounce all day long with absolutely zero. What that is setting up, folks, that is setting up a market that wants to go dramatically lower. My take on this dollar, and here, I'll show you inside the UUP if you want to see something that's really cool. Now, the UUP is the, let me put this back on a daily for you. Actually, yeah, put it on a daily first. What you're going to see inside the UUP is the ETF for the dollar index. Okay, and this is very liquid, folks. It's been trading for a long period of time. Bottom line is that there's no volume up at these highs. It's extended beyond belief. So the UUP, we're at 2440. The UUP wants to get down to this 22 area. That's a big number, huge number. Now, yesterday we were talking about JP Morgan. Didn't think it was going to hit the numbers. Why? It was banging on its swing point with expanded volume. We got it today. Come out with the numbers this morning. JP Morgan jumped the creek with volume. JP Morgan did 47 million shares. It's trading at 56.81. What that does, that opens up, of course, October 15th. October 15th, it was at 54.26. You get a high volume low there at 37 million. And the key is this, folks. The key of the 54.26 is that was 37 million, and JP Morgan is coming into it with even heavier volume. That's a big problem for JP Morgan. You can go through the rest of the equities, meaning Morgan Stanley, Bank of America, all of the above. BAC, we didn't do BAC. Let me do BAC. BAC is a toast too. BAC gap down also today. You did 15 million shares. You're going into that swing low that had 21 million shares. The XLF, same setup. Of course, the XLF broke a B point, broke it with volume, huge volume. XLF's trading at 23.50. That's on its way down to this 21.55 area. The one area that hasn't broken down yet, and this will be the area that basically opens trapdoors all over the place, folks, is the IBB. The IBB is highly volatile, loves to trade with volatility. That hasn't broken down yet, but I can show you flat out. IBB, you have the swing point from December 23rd that wants to get hit at 292. You're at 315. And then it has that monster swing point at 254 from the 16th of October. That's a big number, folks, on the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Don't forget, at TFNN, we do 10 hours of live programming every trading day, 8 o'clock in the morning, 6 o'clock in the afternoon. You get all of it right in your cell phone, TFNN.mobi. Going to be right back, folks. You stay right there. Dow finished down 186, NASDAQ off 22, S&P's off 11.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 186. You had NASDAQ off 22. S&Ps were off 7.5 at the close. Now, when we take a look at this market, folks, this is what you have. We've come off I'm going to put a longer-term S&P chart up so you can see what I'm looking at here. So if we use the SPY, and I'm going to put this on a 3-year weekly. And what you're going to see is this, is that when the SPY first broke down in October, you know, the beginning of September, the SPY was trading at 201.58. It went sideways for 3 weeks. On the very beginning of October, the 22nd of September, actually, we're at 200. 3 weeks later, we're at 181. You know, so decent sized number, 20 bucks, 200 S&P points, right? But what it did there is this. That gave the heads up that the whole trend of the past a good 3 years had been broken. When you break a large trend like that, what it does is this. And a break that I'm talking about is wide price spread, accelerated volume. That's exactly what we had. The October 15th swing, which all these equities have been running down to right now, on the monthly basis on the SPY is just a monster. I mean, you're talking about there's never enough room to get out of the markets on the way down, folks. There just isn't. And when you're talking about 1.3 billion shares, that's what we have at that low there. Okay, that's the first part. Now, we certainly came off that low like a rocket ship. Okay, it actually only took 2 weeks to get back to where we were when it took 3 weeks to get down. But what do we do it on? Well, guess what? We did it on dramatically lighter volume. So you had the heads up. The heads up is that you had a break. The break that you had was dramatic, meaning on monster volume. And when that happens, most times, which anyone that's in the technical business would look and say, okay, you get a retest of the channel line. Well, it blew right by the channel line. It actually came into that channel line with conviction. It went from 195 to 201. That was the week of the 27th of October. What ends up happening after that? You have even less volume at the highs. Then you had the spike down once again the week of December 15th. That's when the market still came back, but you had a highly volatile week. We had a high of 212, a low of 197. You get to a higher high again just by pennies, and then the market lets go again. What you have here now is this. You're back inside the lower channel. Back inside the lower channel does two different things. Your first price target is the October 15th swing low, which that's not hard to take, right? That's only 181, and you're sitting at 200. The larger picture, though, folks, goes like this. The larger picture, and this is nasty. The larger picture is that it's going to be making its way back to the June 2013 level, which is 1550, which is a big number because that's a 25% number. I can actually make the case that this thing wants to get all the way back into 1340. You know, but there's no doubt that the June of 2013 will be the first place that it should have some real decent support. The reason being is that we traded there quite a bit. Actually, the first place that you should actually really get some support is going to be the 1730 to 1750 area. And the way this market is setting up right now, and this is how you're going to be able to confirm if either it's going to happen or not happen, is this. Option expiration is this Friday. The way that you're going to need volume on the breaks on the way down if you're going to go to lower price. Many of the large equities have already done that. So the amount of information that the market has released thus far is huge. And the first get-go on the way down, which is pretty wild, were the oil and gas equities. You know, the big oils. They came down way before oil came down. If we go over to the XLE for a second and watch how I suspect this is going to trade out, the XLE out here today looks like it wants to do a small bounce. The key is going to be on one of the keys is definitely going to be this XLE, you know, because oil loves to trade in huge ranges. So the XLE ended up doing, let's see, 52 million shares. No, look at this. Nope, it's way too much. This is wild. There, you know, what happened here, folks, is that there's so much volume that came in at the lows at the end of the day today. It actually blew away even the XLE bouncing. Pretty wild. The XLE did 52 million shares. You're coming into 57 million. And that's lighter, okay? So you can get an anemic bounce, but that's all you're going to get. Because what you're going to have now is you're going to have a high volume swing low on a weekly basis. In fact, if we take a look and speculate what we're going to have here, the last time we were down the week of the 19th, let's take a look at this. We'll put this on a weekly. The week of the 19th, we were down there on 266 million shares, and thus far we've done 115 million. Yeah, so it's still going to be lighter volume. It's still lighter volume because we only have 2 trading days left, but that's heavy volume when you're pounding a low. So we'll see where this, what kind of bounce you can get going. This has been down. It's already down $25. So the Energy Select Spider is already down like 23%. So that is a big number. We take a look at the small caps are the ones that look like they really want to do some kind of a bounce out here. The Google has been screaming for a long time also, and this is a big number, that wants dramatically lower price. Google right now is at $505. That's a full breakdown. Once Google went underneath 522, you can make the case that Google wants to go to 450, and 450 is right back where Google broke topside in October of 2013. You know, it's a high volume bar. The top of that bar is 508. The bottom of that bar is 433. Where I'm going with Google is that when we broke down last week, when Google went from the 527 to 495 area, you had juice. It just broke apart. And that has been building cause going all the way back to October 2013 in order to get into lower price. So there's big numbers out here that want to go dramatically lower. And what also happens, of course, is that it's very tough to get a decent bounce going when you've had a week that is as highly volatile as we've just had. Most of the time, what even large traders do not want to do, folks, is that they're not going to go home with positions when we've had such a heavy-duty week happening. You know, so the E-minis themselves, E-minis turned around. They got to a lower low today, had volume on the move. That's saying that, guess what, we want to go lower. If we go take a look at overseas, straight across the board overseas, folks, you had dramatically heavier downdrafts out here today. The FTSE was down 2.3%. The DAX was off 1.5%. Spain was off 1.5%. You go over to Asia, and I don't think Asia's going to be any better tonight. The Nikkei was off 1.7%. You had the Hang Seng down 0.4%. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish down 186, NASDAQ off 41, S&P's off 11.5. And, folks, as you're over at our website at TFNN, you're going to see right in the carousel that I'm having a special right now on my daily newsletter, Market Insights. What the special is this. You can test drive it 1 month, absolutely free. Normally that's 2 weeks. If you do the test drive, you're going to get a copy of my book, The Art of Timing the Trade, absolutely free. That's going to be shipped to you. You'll also come to the workshop. I'm doing a workshop next Wednesday night, 6 to 7 Eastern Standard Time. It's a 1-hour workshop. All of that absolutely free. You can test drive it for a month. You like it, you keep it. You don't like it, just call up. You cancel the credit card. Bottom line, you keep the book, you keep the workshop. On the workshop, what I'm going to be talking about is this. I'm going to be talking about where I think the bonds are going, where gold is going, where the S&P is going. I'm going to specifically give you, because I'm sure most people know I'm a bear, but what I'm going to give you is the actual swing points, what you're going to be looking for the bullish or bearish occurrence at that particular price. So check it out on the front page of TFNN. That promotion is only good until this Sunday night. Let's go to Kevin in Northern California. Hey, Kevin, what's going on?
Hey, how are you, Tom?
I'm doing great, man. You having a good day out there?
I'm having a great day. It's beautiful here.
That's a beautiful thing, man.
Yeah. I have a quick question for you about new gold.
Let's take a look at it. You got new gold now. Do you own it? You're looking to buy it? What are we doing here?
I picked it up today at $3.93 when it tagged that first sign of strength back from November 7th.
Okay, let's take a look at it. New gold is they do business, folks. Their biggest mine is up in Canada, okay? Right now, they take in $778 million a quarter. Okay, so I can tell you, I don't like how the volume come out of this, Kevin. You know?
Yeah. That's what I wanted to ask you about, is mainly where to put a stop, because it has had a couple of signs of strength. That one off the bottom there back in November 7th, which was reasonably high volume. And
yes,
then,
it was.
No, and the other one there on December, what was that? 19th. That was really high volume.
That was a beauty. December 19th, it was trading out there at 453. Yeah, there's no doubt. That was a beauty. Let me put this on a weekly just for a second. 'Cause, what's wild about this stock, folks, is that this, gold and silver are highly volatile anyway, but this one, for some reason, is even more volatile. And in the course of a day, it can go up or down 25%. Now, that's a lot easier when the stock's only $3 or $4. So when we take a look at this on the weekly, what we want is that we want it to hold that 377. I see what's going on, though. Yeah, okay, cool. Okay, so you have two different, as you said, you have two different signs of strength on the daily. What does happen on the weekly set up pretty good, and this is what it is. So when we made a low, folks, we made a low of 377. We did that the week of November 3rd. The high of that low, however, is 392. The volume out here is, I think, 43 million, right? 43 million. So in that context, that's pretty nice, because you got down today and you got down to 378. It rejected that level, and then it closed at 401, which is over that 392 area. That's the first part, okay? Now, when you still take that same bar and you just put the crosshairs on it, what you're going to see is that it also went into the December 15th level, and that's why I bought it today at the 377. And that there is 38 million, and thus far we've done 20. So that's saying that it's going to be hard for it to do 38. You want to see a rejection of price. So what I would do is this. On Friday, that's a tough one, man, because you need to stop before Friday. See, this 392 is a big number. You want that to hold 392 because that has tested the high of the low. It's going to have lighter volume than the 43 million, because that means, it had a lot of volume today, but it'd have to do a good 12. It has to do 12 million a day. So volume has to spike up by another.
Out on the weekly, right?
Yeah, on the weekly, because we only have 2 days left.
Yeah.
So another way you could do this is that you could take the lows of today and give it another 20 cents and say, okay, that's where you'd call it.
Yeah. The low today was what, 370?
76, I believe.
376.
Yeah.
Going to check that against the low of that first sign.
It was 377.
That was 358 was the low of that first sign of strength there back in November. Okay, well that's good then. So that's a pretty good setup then, as far as being able to put the.
Where I see a problem is this. It's a great setup on the weekly, right? The real key is going to be, and if you trade the goals, you know this. They will be that, okay, what type of volatility will be here tomorrow? After the close out here, what is happening, which is pretty cool, is that some of the gold stocks are actually getting bid up. And they had a spike into the close, meaning they bought into the close, and that's what you like to see. Yeah. My take here is that this dollar index, if we go over to the dollar for a second, I suspect, folks, and this is what it's going to be, the dollar index is going to be the shocker of what is going on inside the market, you know, and specifically what I'm talking about is that for some reason this market can't stand it when the dollar pulls back. And the more that I keep looking at this, the more that I'm saying, guess what? This dollar is topped out for a couple years probably, you know. Picture this, folks. It took 9 years and 2 months for the dollar to get back to the 92.53. So it's like, okay, what's out there? I'm trying to figure out fundamentally what's out there that will make the dollar weaken up a little. And the only thing I can actually really think about is that crazy Draghi over in Europe, folks, okay, is the guy that basically keeps screaming wolf and walks and doesn't have a stick. He's been talking about QE forever, okay? Bottom line, hasn't done it. What is going on is that on the 24th of this month, which is right around the corner, bottom line, that's, you know, this thing's supposed to be announced and it's supposed to happen. If Draghi doesn't do the QE, that is going to put juice inside the euro. And juice inside the euro will back down the dollar. And I suspect that our Fed itself wants to basically back down the dollar, you know, because you're going to see companies basically starting to blame the strong dollar, you know, for them not making money. So,
yeah, it was interesting. I read something yesterday from Mark Hulbert. You know, the sentiment
right.
Forgot newsletter.
Yes,
and he had some interesting data on just the over bullishness of the dollar.
Sweet.
Right now.
I like that.
And so, you know, from a contrarian perspective, I mean, that kind of jives with what you're saying too.
Oh, I heard today. This was what happens, folks, when you hear some of these outlandish deals from people that are very smart, that at least they're perceived to be smart. It's really cool. And one of them today was this, is that, of course, the dollar's going up. Everyone knows the dollar's going up. The dollar's great. It says there's no such thing as, of course, inside the financial business, folks. It's not even close. And when I heard it, I was basically happy because I said, I think I'm going the other way. And in fact, if you get it, if you Google, folks, I just got by Bloomberg magazine. This is not the Time one. This is not the one that used to be Time, and then now it's Bloomberg. It is the actual Bloomberg magazine, and you get it's about hedge funds, and there's a quote in there that is just so dynamite, and it's a hedge fund manager saying that he was teaching his son. What this guy does, he does distressed debt, and he was saying he teaches his son was 5 or 6 years old or something, that if you want to find the most amount of people that are the brightest with absolutely no common sense, well, go look at the hedge fund business because they all go the exact same way. And it was like, oh my God, I read that quote after I heard the dollar. They're just cracking up, man. But it's weird how it works, right? You know what I mean? So.
Hey, thanks.
Okay, man.
Appreciate the help.
Have a great one. Have a safe one. Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, how you doing, Tom?
I'm doing great, man. You having a good day out there?
Yeah. The streets are clear in Boston, so it's okay by me.
And yeah, it's just a little cold, but they're clear, no doubt.
Yep, that's what counts.
Yeah.
Question for you. I'm watching this oil bounce, and I'm just smelling a violent little counter-trend bounce, and I'm just thinking, man, this has got to be shorted. It might be worth shorting, you know, using a vehicle like SCO here. What's your sense? Get any read on that?
So let's take a look at it. He wants to look at the SCO. The SCO, folks, is the ProShares Ultra Short Crude Oil Exchange Traded Fund. So you're going to short? Yeah, I see what he's doing. Now check this out, folks. This means Jay has traded these before, okay? I suspect you've traded them, okay?
Yes,
Because yeah. So what happens with the ProShares or the direction shares, this one here happens to be double inverse correlation. So oil goes up, this is going down. So what he's saying is that he's thinking of selling this, right?
Yeah, I'm selling the bounce there.
Yeah, exactly. That's right. You're thinking of selling it, though, right? So it's at 91.64. You'd sell it and buy it back at a lower price, right?
Yeah, that's pretty much, because it's a shorting vehicle.
It's a shorting vehicle. Here, you stay right there, because this can get really... We're going to make this simple for everyone. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials finished out 186. NASDAQ down 22. S&P's off 6.5. We're going to be right back.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We're talking with Jay from Boston. We're talking about the SCO. Now, the SCO, folks, is the 200% inverse, meaning the opposite of the daily performance, whether positive or negative, of the oil contract. So what would end up happening, I just want to get this straight with you, Jay. You think oil's going to do a counter trend bounce and go up, right?
Well, actually, I'm thinking that this is an artificial short covering bounce here, counter trend, and I'm seeing oil resume its downward fall.
Okay, so then okay, so now let's go over and CLH. Then it wouldn't be ready to do that yet. This is why. So, and I agree with you, by the way. Okay, oil has gone from $93 down to a low of yesterday with 44, almost nonstop, folks. There was only 4 days in between that oil was up, which is pretty sick. Today, what you had is this. You didn't get to a low, and you had higher volume. You know, yesterday we did 219,000 contracts. It got to $44.78. Today, popped up a little. You did 278,000 contracts, big numbers, and you had a wide price spread. So that says first stop on oil for a counter trend bounce will get you to 54. I'd let it get up there first before you even thought of doing it. Because if you get into 54 with volume, right, with pretty good, then you could, a natural bounce would bring it to 66. Because we just come down from 90. You know, so.
Yeah.
I would
hold my fire and just wait till it drifts upwards a bit.
At least till the first level. The first level, folks, oil, you know, as I said, just came down straight from 90 to 45. A weak counter trend bounce gets it into 58. A decent counter trend bounce gets it into 66. You know, but the way that it had traded today, and now watch this. You know, what I'm looking at, folks, is this. And this is where this gets cool. If I think the dollar, which I do, has topped, what should happen is that if the dollar pulls back, you're going to see oil go north very quickly. You know, if I bring you, I'm going to switch gears for a second, bring you over to the XLE, because it's really close whether the XLE is a buy right now, folks. And of course, inside the XLE, you have all the large integrated oils. You know, it hit a low out here today. Exxon did it. All the rest of them did it. But the bottom line is that, you know, you're talking about Exxon, Chevron, Schlumberger. Just Exxon and Chevron alone, folks, make up about 30% of it. Exxon and Chevron are not going away. We need oil. So when I'm looking at this XLE, Jay, I'm saying to myself, oh, man, this is so close to a bounce. And I'm not going to take that trade. And normally, if this market wasn't as nasty, I would take that trade. I'm not going to take that trade because the surprises are going to come to the downside, you know.
Yes.
So, but that's my take on it. And, you know, it's very possible, if we go back to the dollar for a second, it's possible that it's going to be the contraction of the dollar that gets oil going.
Yeah. Because fundamentally, I'm not seeing anything else. There's just nothing around to give the oil bulls reason.
No, there isn't. There absolutely isn't. And what you have, folks, is this, is that the commodity markets in general always overshoot. Regular markets overshoot. The commodity markets, folks, are vicious. And, you know, if you take a look at natural gas out here today, and this goes along with it, now, natural gas didn't go up on a fundamental basis today. What you had with natural gas was the Midwest, the Northeast, right where you are, evidently from the January 22nd to the 26th, there's going to be another nasty Arctic deal coming down. And they're saying, hey, guess what? Gas is going to be used. Now, that being said, they're speculating that because right now, the gas supply lines have never been so full. If that nasty weather doesn't come down, guess what? It's not going to be pulled out. But natural gas today was up 11%. Had the wide price spread, accelerated volume. Natural gas at 320. Looks like it wants to get up to 370. You put that together with the bounce in oil today. If the dollar pulls back, that says that, you know, that we get a good counter trend bounce going. So.
Yeah. So I'll be careful. These things are so treacherous. Oil's treacherous, and leveraged vehicles can be treacherous too.
Oh, yeah. If you get them right, it's a beautiful thing. You get them wrong,
yeah,
it's not a good thing.
The rule of thumb I use is that it's costing me 10% in slippage every month, at least that. If I'm going to be in a leverage, say a triple leverage vehicle, anyway. But if things are going your way, would you hang? How long would you hang on a good leverage trade?
No, I don't.
Yeah,
I don't.
Yeah,
What I do, let me show you something here. If you take a look at DUG, now this was DUG. I can stay in them, but never a month. That's not. You're playing with trouble big time. What you want to do, folks, is this. And if you want to understand these leverage products, go to our website at TFNN. You'll see along the top, we'll say ETFs. There's 3 white papers there that absolutely are dynamite explaining how they compound the number on the way up and they get defensive on the way down. It's really important to understand that. So if you get the trend right, yeah, you get action. If you're in a choppy market, they will kill you, both the bull and the bear one. Okay, so they're not vehicles you want to hold on to. The DUG, if you get these things right, it's sweet. Okay, the DUG in September was 37. It never looked back to 56. Then you pull back, and it's a 44, and it never looked back again up to the 65. And then, of course, what also happens is this, and this is when you had me bring up the SCO, because this is what I thought you wanted to do with the SCO. So, and this very well could be the trade. Now, this would be the trade. This would be the trade I'd do if I'm day trading, right?
Yeah.
You take the SCO, folks, and you shot the SCO. Because the SCO is at a high number, meaning 91.64, what ends up happening is that number, well, no, you still have to wait, because this works both ways, so this can go up again. You have to wait till there's a reversal intraday, because I'm going to switch gears again now. Forget the SCO. I'm going to go back to the DUG, because I want to show you something on the DUG. If you're trading leveraged vehicles, you absolutely have to be aware of leveraged vehicles when they get to high prices. You'll see this DUG, it was at $65. That was at December 16th. The next day it was down to 56. The next day it was down to 50. Because they compound on the way up and get defensive on the way down, when you're doing that with a large number, it's really dangerous. So you can ride them, but if you ride them, folks, take your money. Because I like trading these vehicles, $14, $18, they're beautiful vehicles. They get up to 20, 25, no big deal. You start getting in, if you get them right, they're going to go from 25 to 35 to 40 or something. When they start getting up at 40, big problem. Have a great one, man. Have a safe one.
Hey, thanks, Tom.
Okay, man. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking right here tomorrow morning, 8 o'clock live. Go get them, folks.